Okay, I want to talk a minute about cost of goods sold and gross profit. Okay, so looking at a multiple step income statement, what we would have would be total sales minus cost of goods sold and this gets you to gross profit. And then we would subtract out selling expenses and we would list each of those. And then we would subtract out general and administrative expenses. And we would list each of those. And then we would have a total expense, and that would get us to net income. So which of these accounts are our expenses? Well, our selling expenses are expenses, our administrative expenses are expenses, but also our cost of goods sold are expenses. But we list it out separately up here. Why? Because it is such an important expense. Because it tells us what our profit was just by marking up our goods or whatever it was we just sold. Let's look at an example. Let's say we bought one car. If we bought that car for $10,000, so this car cost us that, and let's say that we sold it for $20,000. So when we list it like this, we can show that we made a profit of $10,000 because we can easily see that it cost us $10,000, we sold it for $20,000, and we made a profit of $10,000 just by marking it up. Then we know we have to have enough to cover any selling expenses here and any administrative or general expenses here to still have some net income there. So that's why we move the expense up there so we can see our gross profit and break that down into net income. So let me know if you have any questions on that.